Morning, I'm your host, Lance Roberts, for 3 minutes on markets and money. Yesterday, Pfizer got full FDA approval. Of course, the Biden administration saying this is improving sentiment, right? Everybody can get the jab now. Is that really what's driving the market of the last couple of days? Not so much. What we saw, of course, after last week's brief drubbing of almost 2%, investors came in and started buying the 40-day moving average, didn't even wait for the 50-day moving average this time around, and markets rallied back towards their peak of the market just from a couple of weeks ago. So again, that correction we had was very short-lived, didn't do much really to resolve any of the underlying concerns. But again, not surprising, this has been a repetitive action that we've seen over the last several months. What we're looking at here is really the lack of liquidity in the market. When we do have a correction in the markets, we see a very sharp spike in volume as people are going to sell stocks. And we saw this repeatedly. At every previous peak in the markets, we have the exact same spike in volatility and volume of people selling stocks. The problem is when they come back for buying the dip, that volume immediately drops to extremely low levels. And we've seen this every single time here over the last several months. And this low level of volume suggests that prices have already reached their peak for this current trend and likely are just going to kind of grind sideways here again here over the next couple of weeks. Now, interestingly enough, every sell-off that we've had over the last several months has occurred on the same date of the month. The 19th of the month has been the bottom for each one of these sell-offs going back over the course of the last several months. Why is that? Because that's options expiration day over the last several months. So again, what's happening here with options volatility, in particular, the role of this, of course, what we call gamma, that's all showing up here in the markets on a regular basis. So again, while markets may make new highs here in the short term, we don't have a lot of upside here, and the risk of a downside draw really continues to grow because of this lack of liquidity. In the market currently, no one is willing to sell stocks because of the fear of missing out. However, the problem becomes for buyers because buyers are living at much lower levels. And at some point, when the market does open up here and we see a real contraction in markets, buyers are going to be at much lower levels here. And this is where you'll see a very quick correction back to the 200-day moving average or more, because of that exit of the markets gets very narrow very quick. This lack of liquidity is problematic, so make sure that you're paying attention to this. Again, doing some risk management in your portfolio, raising a little bit of cash, adjusting some of your risk, lowering your overall beta of the portfolio relative to the market can help you kind of navigate any potential draw that we might have. Again, what causes that draw or when, no one knows. But again, if you wait for it to happen, these things happen so quickly, you won't have time to react to it. You've got to prepare for it in advance. I'm your host, Lance Roberts, for 3 minutes on markets and money. We'll see you tomorrow.